Hey guys, what's going on? Rhett here. Wanted to talk today about something that I talk all the time with my coaching clients about, that I'm kind of crazy about, okay? And that's insurance. Now, as things have shifted in our nation, in our country, and economic times are changing, there are certain things about insurance that have remained constant, okay? It remains one of the most important aspects of real estate investing, or in any kind of investor at all. It should be a very, very important asset in your life, okay? Now, as an investor, we talk all the time. There are always people, unfortunately, that are trying to take what we have, okay? Those of you who watch this channel understand that when we take risks and we try to better our lives, and we try to better the lives of those around us, and for other people, you guys know on this channel, we always discuss why we do Section 8 housing and why we're in this business. It's to create, obviously, cash flow for ourselves and a good investment for ourselves. But at the same time, we're creating a better situation for another person who can't afford to get themselves in that situation on their own, right? So this is definitely a symbiotic relationship with our tenants. Now, back on track. Insurance is always going to be a very vital aspect of real estate. Now, of course, we're always going to insure ourselves to make sure that if there's a fire at the unit or there is storm damage or something like that, we're always protected, okay? But one aspect of insurance that I'm not sure landlords understand is what kind of things they need to have their policies cover, okay? Now, with all my coaching clients, we go through all of their insurance policies. I get them in with my insurance team, and I know some of my clients watching this know how big of an asset that has been for them. Right, but we basically run a full diagnostic on what kind of insurances you have in place and what needs to be done, where they should be as a investor, because investors need a entirely different set of policies and coverages that normal people don't. So guys, for example, when you have an insurance policy, okay, there are a couple different things. Now, you have the dwelling insured. Okay, now what that means is if there's a fire, you have the dwelling insured. So if it burns down, you get the money that you insure it at. Now there's two ways to insure your dwellings. Number one, you can do the cost of the dwelling. Okay, so if you buy a property for $100,000, you can insure it for $100,000. All right, or you can insure it for the rebuild value. So you might have a $100,000 house, but the rebuild cost might be $240,000, meaning that house that you have that's only $100,000, it would cost $240,000 if you were to level it to rebuild it based on current rates, okay? Now, thing about rebuild cost is we probably aren't going to do rebuild cost, because as investors, if we have a home that burns down and, God forbid the tenants aren't there, everybody's okay, the house burns down, we're just probably going to demolish the rest of the house, take the money, and just go buy something else. The reason why we're not insuring it for $240,000 is it's going to cost us more a month. Think about it. We're insuring it for 150% of what the value of the home is for. Now, if you have a mortgage on the property, banks are most likely going to make you insure it for the rebuild cost, right? Because they are one of the owners of the property and the main lien holder, they're the first lien holder. So they get a major say when it comes to insurance. So if you own the property in cash, guys, I would tell you, insure it for just the cash value of the property. You don't need to insure it for the rebuild value. That's something not a lot of people understand about insurance. Insurance companies are going to say, hey, yeah, you know, it's only worth $100, but you need to make sure you insure it for $240. You don't actually need to do that. And the odds are, in 99% of the time, guys, if you do have a total loss of that property, you're just going to take the money and move on. You're not going to rebuild the same house or a similar house on that property. So you don't need that, okay? That's number one. Now, for landlords, one of the most important things we need to make sure we're covered for is vandalism insurance. I hear all the time, guys, that you shouldn't have Section 8 tenants, blah, 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 blah. They destroy the property, blah, blah, blah. I'm sick and tired of it. You guys know on the channel, it's just not the case. I mean, you can have cash tenants that destroy units. It's just screen your tenants, guys. Make sure we get people that are good. But vandalism insurance is huge. So if a tenant comes in and they destroy your house and they ruin it and they just destroy it, You file a claim. You're driving, your car gets hit, you file a claim. Somebody vandalizes your car, they key your car, and they smash all your windows out and they pop your tires, you file a claim. Somebody takes a box cutter to your walls and rips all the copper out of your house and pulls your wires out of the ceiling and steals your HVAC, file a claim. Now, of course, you're going to say, oh, it's expensive to file a claim. Well, of course it is. It's more expensive to fix your house. I've had to file way more insurance claims with cash tenants than Section 8 tenants. But it's just a way, guys. Again, we are mitigating risk by insuring against vandalism. As a landlord, we take out a landlord insurance policy. We make sure that vandalism is covered. Okay, that's number one. Number two, loss of rent. Okay, this is one that is very important. If less so for Section 8 tenants, more so for cash tenants. If you have a tenant who doesn't pay rent, that is a claim, believe it or not. Now, I have had instances before where I have tenants in units who destroy the unit and don't pay rent for months and months and months. I file a claim. That claim gets me money for the rehab on the property against all the vandalism that was caused and all the damage. And for every single month that I didn't pay rent, I have loss of rent insurance. So I get paid for every single month that I didn't get paid rent. Now, as some of you unfortunately know, there are COVID assistance measures that are still kind of waning out from 2020. And you guys know that if you had a tenant that filed for COVID assistance, they're still not paying rent, right? And those funds are still way behind. It's a lot of rent you guys have missed. It's nice to have insurance against that. If you have tenants who are squatting, who are missing payments, who are more so, months and months and months and months delinquent, and you're in the eviction process, you guys have the insurance to know that you have loss of rent on there, okay? And that's something that is a small payment every single month that goes into your major insurance. It doesn't matter if you own the property in cash or if you have a mortgage on it. These are all things that you can get under your insurance policy, okay? And guys, lastly, the third and most important policy of all, okay, is a strong liability policy, okay? If you look at your insurance policy, your homeowner's policy, or your landlord homeowner's policy is what it would be, you'll see that there is a liability number. What is that number? If it's $100,000, if it's $200,000, if it's $300,000, if it's $400,000, it's not enough, okay? I do not allow my clients to get anything underneath $1 million, 7 digits, 1 million of liability policy. Now, what does that mean? You have $1 million of liability coverage, meaning if somebody has a bad day at your property, falls, breaks their leg, breaks their arm, something bad happens, and you get sued, your homeowner's policy will cover you for the first $1 million of a settlement, okay? Now, the insurance company will come in, they'll handle everything because they're the ones that are on the hook for the $1 million, right? Not you. It's incredibly, incredibly important that we have the maximum amount of liability coverage that we can have on these units because we want to make sure that we're never getting sued. And if we do, it's not going to be on us. We have such a high threshold of coverage before anything can reach us personally. Now, in the past, I've talked a lot about this on this channel about buying properties in LLCs and affording yourself LLC protection. If, for example, you can't do an LLC because of financing restrictions, if you're dealing with a lender who will not give you residential financing, if you are an LLC and you have to buy these personally, taking out a very high liability policy is how we hedge against getting sued, and it's how we create a buffer between us personally and the tenant. So you don't always need an LLC. An LLC is a limited liability company, right? It's about limiting our liability. So if we can't purchase in an LLC, we find other ways to limit our liability. How do we limit our personal liability? We take out gigantic liability coverage on these properties. Now, guys, you're probably thinking, oh my gosh, it's probably so expensive. It's crazy how cheap it is. It's absolutely crazy. I have clients that come into the program and we talk about umbrella policies for them personally. A lot of people don't understand. On average, you can get $1 million liability umbrella insurance policy for between $10 and $20 a year. Okay, I'm sorry, a month. But still, think about that. It's an extra $1 million of liability coverage for under $20 a month. I mean, guys, it's crazy. There's no such thing as being overinsured, especially in a world that we live in right now where people are crazy. It's better to be overinsured than underinsured always. And people are always going to try and take what we have, guys, as investors and those who are willing to take risks. So having the proper insurance is extremely important, okay? So what did we talk about? Dwelling insurance, vandalism insurance, loss of rent insurance, liability coverage, okay? All 4 of those things go under a homeowner's landlord policy, okay? You tell the insurance company that you're planning on renting the unit out. It's going to be a rental property. And if they don't give you those 4 things and they're strong, you're using the wrong insurance company. The thing that I love, guys, is all my clients, we use an insurance team that's phenomenal. They already know what I expect. They already know what I want all of my clients to have, and they give them a bundle already. It has everything. They're ready to rock and roll. So, guys, make sure, go over your properties if you have them already. Go over them. Make sure they have the right policies. Make sure they have the right stuff. Make sure you're always protected. We'll see you next time.